I've got a special guest today. This is Bruce Pogachnik, and Bruce's family has Finlayson Bank shares,
Correct.
which includes First Independent Bank down in southwestern Minnesota.
Correct.
And there's 7 banks in that?
7 offices.
7, okay. And then we've got Northview Bank up here, and is that 12 now?
12 offices.
12 now, yeah. 12. I mean, so you're a community bank, a family-owned bank, and an employee-owned bank, which I know for a lot of listeners, I mean, that's, you're kind of looking for, like, I encourage people, find a local anything, okay, the non-Amazons of the world, and support those people, because this is actually where you have stock that those employees own that then you are providing for people in your community through that stock when they own that. So for their future, and as opposed to some person out in Silicon Valley. So anyways, that all being said, Bruce, you started running the bank when you were
23
years old. Baptism by fire, right?
Correct. I started in the bank right out of high school at age 18, and by 23, situation was such that I was basically running the bank.
Yeah. Now, I want to talk today, folks, and remember I always make this pitch, but subscribe to the channel. We've got to have a great show for you here today, but I want to talk a little bit about monetary supply, monetary policy, and how that's affecting things right now. And in the banking business right now, I mean, bonds, you guys rely a lot on bonds. So you're making loans, you basically buy and sell money.
Yep.
Okay, but you also rely on deposit accounts at the bank.
Correct.
Which has been tougher lately because, I mean, savings rates are so low.
They bounced a little bit in the last year with COVID because people have been at home and not been able to shop or go out to eat in certain cases. So the last year balances have built up a little bit as people have put a little cushion in.
Okay. Yeah, but still, savings rates, what they're earning is so low that a lot of people are trying other things.
In the United States, savings rates historically have been pretty low. We've basically spent what we earned, and that spending's kind of supported the world economies. You know, the United States has had a balance of trade deficit for back to the end of World War II, and it was a wonderful thing after World War II because it helped reinvigorate Europe, our spending in Germany, France, economies that were decimated by the war, and the American dollars came over there under the Marshall Plan, and it worked really well until the U.S. got pushed off the silver standard or gold standard in, I think it was 71.
Yeah, I think so, yeah.
With Nixon, actually, before that, after the war, it was with Nixon in 71, and we went off the gold standard, and then the balance of payments became kind of a problem. We were a deficit spender, and then the country became a borrower. And
so when we look at the Federal Reserve, and, you know, many people in my audience are very suspect of the Federal Reserve. That's the nature of that now, because it's kind of a pseudo-government entity, but it's private. Explain, how does that work? I mean,
it was set up as a private entity to have separation from the government and Congress. In certain years and times of stress, and recently you see that government, president, and maybe Congress having more influence than they have had in the past, and maybe more influence than they should have on the Federal Reserve, and start to dictate more monetary policy. And sometimes we can see what's going to happen in the United States by what's happened prior in Europe or over in Japan, where their government puts a lot more pressure, has a lot more control and influence over their central banks than they should have, maybe, or than we historically had in the United States.
Well, I mean, in those countries right now, I mean, we're complaining about our savings rates here. You know, it's like 0.2% in your savings account or something, but they're negative. Like,
they're negative, and they've been that way for about 10 years. So, you know, when an economy goes into recession, the government thinks if we lower rates, it will encourage people to borrow, spend, get things going again. And that happens to a point, but at some point, if it goes on long enough or becomes too deep, the spending, any spending on debt, anytime you borrow money to buy a car or anything, you're taking a future purchase, because if you had to wait to save cash, it'd take a few years. So debt brings a future purchase back into the current. So it does help the
Yes.
current economy, but eventually
But it
more and
defers
more
the
debt.
future.
Yes, and so you get to the future and then, everyone's spent out or there's too much debt, and then sometimes a crash can be a whole lot worse. So anyway, in Europe to try get those rates, they took them down to zero. That didn't work. They started taking them to below zero, which just is crazy. Germany maybe got the worst, and even a couple months ago, their 10-year government bond yielded a negative 50 basis points. So
Their government, 10-year bond, negative 50.
yeah, so if you put $1 million,
Negative 50, just for those who don't understand, would be half a
0.5%.
of
Yeah,
interest.
a basis point is 1/100%.
Yep.
And so if you bought $1 million in German government bonds and held them for 10 years, they would give you $950,000 back. 10 years of losing money, guaranteed losing money. And that's in best case scenario.
This is the thing, and this is, okay, my great struggle, Bruce. This is my great struggle. Nothing makes sense to me in this. So I'm just trying to, make this make sense. How does that work long term? I don't understand how that works. I don't understand how that works.
In a short term, maybe it works just to get things jump started again, and then there's enough momentum to keep it going. But I think once it becomes long term, when you look at life insurance companies and pensions for people that have to invest, so when the person retires, they can draw it off. There's two problems. If they're buying bonds that are yielding nothing, that investment doesn't grow.
Yeah.
And so either the pension that's going to get paid out is going to be reduced,
Yeah.
or in some case, government pensions, taxes have to be raised to make up the difference from promised pensions. And the same within life insurance companies. So it really wreaks havoc with, the banking system, insurance companies, pensions, and things like that when it stays that low for that long.
So now, going back to the banking system, we have all these large banks that are TBTF, right?
Yep.
Too big to fail. We learned about that during the financial crisis. All of a sudden, we've got to bail out large corporate entities because of the risks that they took. And then actually they put in all these laws in place. Now, one thing that I don't think people understand is that more laws actually benefit the big guys. I don't care if this is in banking or, like the Amazons of the world that lobby for certain laws. Because they have large teams of accountants that they spread across multiple branches. Now, you've got, whatever it is, a total of 19 branches between the two bank groups. But, you don't have
We're still small.
We're still
compared.
small.
We're community banks. We're located mostly in towns under 500 people. We're in a town of 66 people. So, we've tried to bring banking to, rural Minnesota. That's where we're located, and trying the best we can to stay relevant in our communities.
Yeah, and so, these big banks, first off, their operations at each individual branch are larger because they're in these bigger cities. Secondly, they're able to disperse those expenses across a larger number of branches. And so it really puts pressure on small banks, but really does not put that much pressure on the big banks. And even when the big banks cheat, and I gotta throw this out there quick,
And that's the point I was going to get to.
they got hundreds of millions of dollars in fines.
Yes.
Yeah.
And so the big companies, whether in banking or anything, have never been opposed to regulation, because the more regulation they know will just force out the smaller operators who can't afford full-time people or the computer systems to keep up and automate some of it. But what we find out really is a lot of the big players, they pretend that they're in compliance. And you see that in banking, where these mega banks, the Citibanks, the Wells Fargos, every 2-3 years, they're paying $150, $200 million fine.
Yeah.
The European banks, money laundering. And they find it easier because they're making their money in billions of dollars. It's easier for them just to pay a $150 million fine. They never agree to any wrongdoing. They just pay it as a normal expense and they go on. And one of the interesting things in those settlements always says it allows them to continue in that line of business. So it's like, we make $1 billion, we get caught, you fine us $100 million, we gladly pay it, we don't admit any wrongdoing, and you let us go back to making the $1 billion.
It's almost just like a little political game
Yeah,
of sorts.
and so you'll see that with big companies across all, their systems aren't any better. They maybe hide them a little better, and then when they get caught, they just pay a fine and they move along. So
Yeah. So this is, I've been encouraging, and anybody who's been watching my podcast knows that I'm really encouraging people to, shop locally, buy locally, support the local economy. And we're going to do another segment on localized economies that we may be seeing in the future in times of crisis. But I really encourage you to do that. And even if you look at it and you say, oh, I mean, I would earn another 1/10 of a point or 2/10 of a point on my savings, you have to decide what kind of world you want to live in. I think that's one of the big things that I think you need to really decide what kind of world you want to live in and how much power you want to give to large corporations in your life. Okay, so for those who are concerned about cancel culture, or for those who are concerned about free speech and those types of things. I actually had somebody ask me this the other day, Bruce, you'll appreciate this, because everything, I just hate the fact that everything in life now is so political.
yes.
Like, you cannot get away from this anywhere. I mean, why do I need to know what every company's political stance is on everything? I don't want to know, actually. I mean, I don't really want to know. I don't necessarily want them giving massive sums of political contributions. I would rather they help out their local communities, the food shelves, the food banks, working with their employees to do food drives for those types of things, or giving to the local, Awanas Club, whatever. I mean, there's all kinds of organizations and communities, or missionaries that are taking the gospel and food and medicine supplies overseas, or eyeglasses, and there's so many good things to give to. And yet now we just find out it's just all politics, and they're all just buying influence is what it amounts to.
Yeah, and I think you find, we talked about fines, but you also see some of these companies, they'll come out with all these statements, and then 6 months later you'll see a news report where the founders, showing up for sexual harassment. They're not walking their talk
Yeah.
at all. It's a front, it's an image. There was an
Well, look at
insurance.
Cuomo, which just came
Yeah,
out.
exactly. And so,
Believe all women. I'm sorry.
Except when I get caught. So you have that in there. So those are fronts that they do for image and political purposes. And if they are enacting and doing them, more power to them.
Yeah.
I mean, if they're doing good things and they're doing it right. But a lot of times it's just done as window dressing. Things continue on the way they've always been. And so it's hard when you're on the outside looking in to know if there's any real truth to it. So I remember a couple of years ago there was an insurance company,
Yeah.
and they were going to donate 10% of all their profits. And this is all well and good, and they had their charities, and I started looking at it, and to the extent you can find anything, and you realize it was a startup, and that they wouldn't have profit for years and years. So,
Why not?
Yeah. So if you
We'll give away 10% of nothing.
yeah, so if you actually asked them what they gave away in the prior year, it was probably next to nothing, but that was their big pitch. They were,
It's just a whole lot of virtue signaling. It's a whole lot of this, look at us, we're doing so good here, and then they're not.
And then you look at the local hardware store owner or something, you see them in their community. They're working, they're on the organizations in town, they're helping their communities directly. And so
Yes.
if you can support them and support rural Minnesota, rural America. I mean, we're flyover country, and if we don't support ourselves, no one else is going
We're
to.
the somewhere people,
Yeah.
as it was. That was
Yeah.
a great article in the New York Times. Bruce, you shared that with me. It was a few years ago or something, but basically it was the revolt of the somewheres. And, these people in rural America were somewhere people, we belong somewhere, where a lot of the elites just view this as kind of a world, and it doesn't really matter where they live or what.
They can live anywhere. They can live in New York City. They can live in London. They can live anywhere. So they're anywhere people. They're cosmopolitan. Their work doesn't tie them to a place. They move around, and somewhere people are tied to, family, land, community.
Yeah.
And, we identify with our communities, and anywhere people maybe don't even identify with a nationality. They have one, they have a passport, but they really could live anywhere.
Yeah. Now, the one other thing is, so when you're lending money at a bank, now there's home loans, and I think people don't understand this, but when you get a home loan, that's actually a government insured loan.
Some are.
Yeah, the bulk of them. And so the government is actually assuming that risk unless there's error on the bank or
Correct.
malfeasance. But when you make a loan, let's say on land in northern Minnesota, because you guys do a lot of land loans, or farmland down in southern Minnesota, what have you, you're actually keeping that loan in-house. So
Yep.
you're making that loan, and you need to have the money to lend the money. So
Correct.
the bond rates, like, really are playing into this. And you just explain that process a little bit, how you get money, how you lend money. How does a bank do that?
So a bank is just an intermediary. They take in deposits from customers and they lend them out. And then they have their own amount of capital, say 10%, to absorb things if anything goes wrong. They're the risk taker in there, and their capital is the buffer.
Loss
But-
mitigation.
Yeah. And so you get deposits from the customers to the extent that you have loans in excess of deposits that you can raise in your local community. You can get outside deposits in large, or you can get borrowings from the Federal Home Loan or a government agency where they go to the bond market and then they relend it to community banks. And
So you buy that money. So let's say that money costs you half a point of interest, right? So it's
3
50
years
basis
is about
points.
40 basis points, a little under half a point right now.
Okay. So, but yet if you put 3 years out to, like, let's just say you wanted to buy 3-year bonds, okay? So you're buying, what's,
3-year treasury would be less than that. So, you'd get maybe 30 basis points. And then banks have what you would know as a checking account. They're overnight Fed funds. So they have to have this pool of cash. So when you write a check, when you draw the money, it's there. So they have this money that reprices every night and sits there in their checking account, basically. It's called Fed funds. And the other day, Fed funds were at 1 basis point. So the bank that I'm currently working in, because there's been a lot of money coming into communities with some of the PPP loans, some of the government programs. It's a farm bank, so they've sold their crop this time of year. So the bank was sitting on $30 million, a lot of money in Fed funds, and they're getting paid 1 basis point. 1 basis point on $30 million is $3,000 a year.
wow.
And so people ask, how come you're only paying 10, 20, 25 basis points on your savings account? Well, we get $1 million in, we're paying 25 basis points, which is $2,500 a year, and we're getting $100 a year on $1 million. So, we don't want to chase them away, but it's a transaction that right now excess money is just crazy. You've never seen anything like it.
Yeah, I mean, it's just, fire up the printing presses, print it out. I mean, run another stimulus. They're now, looking at another 1.9 trillion. When does it all end? I don't know. How long can this go on? And I think this is going to actually lead us into the next show when we talk about stores of value. So I'm gonna cut this one right here, folks, and we're gonna talk about stores of value. You're really gonna want to pay attention to this one when we talk in terms of precious metals or just commodities or any sort of durable good.